All right, guys, good morning. Good morning. Welcome to our morning note. It is 9 a.m. Eastern Standard Time on February 22nd. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you so much for taking the time out of your day to join me. Looks like the chat is open. I went ahead and figured that out, thankfully. So you guys can ask questions if you like we did before. I don't know what happened there. Before we begin, make sure to click bottom right-hand corner of your screen, turn on notifications, subscribe to our channel, like our videos. Really do appreciate it as always. Bring the channel up and more great things to come. Let's take a look at the market, shall we? Dow futures down 146 points. NASDAQ taking a bigger hit, down 1.16%. S&P futures 38.77 with 38.62 as your line in the sand. That's your support. We'll talk about that here in a second. 22.53 on the Russell, down about 0.5%. Bitcoin futures taking a little bit of a hit after tapping all-time highs over the weekend, down 5.4% on the future side. Bitcoin spot is at 52,202 currently. Crude futures up 1.65%. Gold up 1%. Silver up 0.87%. Bond futures just went green, so I guess the yields just came back down a little bit. VIX is up 9% at 24.07. The US dollar is down 0.20%. Euro dollar up 28 pips at 121.45 for my Forex people. Dollar yen down 12, 105.31. Okay, so let's talk about E-mini futures first and talk about yields. I talked about that on Instagram, saying that we're going to talk about it. So taking a look at E-mini futures here, you can see pretty much since the big pop of about 3 Fridays ago, so about the beginning of the month, you can see we're basically checking back down to that level. 38.62 was the previous breakout level. We overshot it up to around 39.27, kind of hovered for about a couple of days, and then Sunday before the holiday we shot up, got as high as 39.59. We dumped and we bounced, dumped and bounced, dumped and bounced, and then we dumped again. So here we are. You can see 38.62 right there is the support level based on the Fibonacci levels that I have placed. I believe I have the, I don't know why I thought of PowerPoint there. And you can see I had this on the hourly chart from earlier, actually later last month. So let's go ahead and focus on that. So you could see this chart here on E-mini futures, right? Kind of a chop and then kind of a retest back to the lows. I wanted you to take a look at TN/TN. This is bond futures ETF. So keep in mind, remember we talked about this. Bond yields move inverse from prices. So again, if prices go down on bonds, bond yields go up, right? You can see since February started, since the chop of the E-mini futures, you could see just straight shot to the downside. Now we got some bounce backs here and there, and we did get a nice little bounce today. But you could see that the correlation between the E-mini futures, S&P, and the bond market here, you can kind of see it's kind of working together. Let me see if I can get that to you in a better tone here. Let me see if I can show you a better chart here. Give me a second, and then we can get a good comparison going using TradingView. So let me go ahead to TradingView. I do have the plus version, but we're going to go ahead and just use this one since Kevin, my VP, uses my TradingView, or our TradingView account. So I don't want to mess up his charts. But this is a good way to compare. So I'm going to go ahead and compare S&P to the US 10-year, and then that'll really give us a nice comparison of how that's moving. So S&P, again, as the cash account, is cash, the cash S&P, not futures. So let's go ahead and go to an hour chart together, and you can see how the S&P is in blue and the US 10-year yield is here. And you could see pretty much sideways action for the most part. But as we dipped into yields, as yields fell a little bit, the S&P did tend to bounce here. But again, now we're getting a slight breakout on yields while S&P has been relatively flat. If we kind of bring this down a little bit more to around a 15-minute chart, and you could see that yields are basically just holding down the S&P. But again, this is just the cash account, the cash chart here. Let's go to a daily and compare it. And you could see as bond yields fell, the S&P did start to rise gradually. And then when we started getting the violent spikes, again, the volatile spikes, that's when the S&P started really taking to the downside here. You can see here as we get some spikes, the S&P started hitting a little bit to the low side, but then gradually towards the tail end of December, we started rising. But you could see as this spike came, then it started just kind of going sideways. But again, bond yield spiking is not a horrific thing. It just means that interest costs are going to be higher for those who want to borrow, since the U.S. 10-year is kind of your baseline for everything for bonds, for corporate bonds and investment grade bonds and what have you, or government bonds too, obviously, like state and local municipalities. But you can see how the yields are going up, and the S&P it just isn't working around with it. So again, if I kind of bring up maybe a better chart here, maybe a 15-minute chart, and you can see just not even moving in sync anymore. We were to the point where yields would fall and the S&P would rise with it. Again, because borrowing costs are lower. But you can see the comparison here. If you want to do this, this is a free tool you can use, this TradingView. You don't need to sign up for it. But again, you're going to have delayed data. But again, it's a good way to compare. Let me see if I can go ahead and see if I can do futures instead. Let's see if I can go and get ES. I think ES here. And we'll go ahead and contract it up with the US 10-year. And maybe that'll give us a better look on exactly what's happening. You can see how bond yield's spiking, how S&P has fallen since then. You see the big spike here. This is a better chart than the S&P cash. And you can see to the downside. So kind of a inverse correlation there. They're not moving in tandem. They're moving inverse from each other. So again, the deal is not that the yields going up is a necessarily bad thing. That's more of a risk-on reflation trade sort of thing. But again, the volatile of the move, the sharpness of the move is what scares markets. So again, we don't want to see yields spike 30 basis points, 20 basis points in a day, or even 10 basis points in a day. We want to see just gradual movement to the upside, again, showing that maybe more of the institutions and traders are getting away from fixed income that are more safer and into more equities. Again, when rates usually rise, it's usually a good sign of the market kind of coming into the grips of the point that, hey, we want some better return than just bonds. Remember, bond yields are hit the point of 0.58 on a 10-year, which was the all-time low. And I believe now we're at like 136. So, 1343 right now currently. So again, you're talking about an overshoot there, almost 300% move from the lows. But again, you don't want the sharpness. You want gradual move up, yes, but not a sharp move. That's what's kind of holding down the S&P today. And but again, we're getting a little bit of a bounce back, obviously, due to yields. You could see the yields here, and I'll show you a comparison here. Nice little bounce here, overshoot here, overshoot here. So if you have /TN, which is the 10-year futures contract versus E-mini futures, you can see nice, kind of the very close correlation, except for these kind of quick volatile bounces here in this chop zone. But again, you can see more of a bear trend on bonds yields, not bonds, bond yields. So again, remember, this is bonds going down, bond yields going up. So bond prices are down, bond yields are up. Please, it's very important, very imperative that you know the distinction, the difference between both. So again, we're going to go ahead and keep an eye on that as we go. But if we do get a bounce, that's something to watch for. I'll be watching yields exactly here. And you could see CCL is what I'm watching. We have some calls on CCL, which is Carnival Cruise. Remember, I talked about that if bond yields are jumping up, the biggest beneficiary would be banks. And again, we do have that trade as well, XLF for April, that I'm watching. So CCL, I have the 25.5 calls with the team. We're about to be in the money, which is a very nice thing. So what I'm starting to notice here now is more of the catch-up trade, which is airlines, cruise lines, travel sort of thing, because they've been hit before. They've been getting a big-time hit. All right, before we take any questions, let's take a look at some pre-market movers. Palantir is up 3.24%, even though, excuse me, I was looking at an email. Palantir is up 3.28%, even though Peter Thiel sold by, I believe, $500 million worth of his stock, but it's still up 3.24%. I do own shares in Palantir. Sundial Growers, again, I've been seeing a lot of talk about it on Twitter. It's down 7.84%. On the Dow, the only bright spot are Chevron and Verizon. Thank you, Warren Buffett. And Merck is up 0.15%. Apple is down 1.5%. Again, Apple moves very closely with the S&P. Boeing down 2%. with some news regarding their planes. You can take a look at that on Twitter. I retweeted that. Microsoft down 1.48%. Again, big part of the Nasdaq and the S&P. So Nasdaq are taking a little bit of a hit. Disney's down 1.15%. American Airlines, Carnival is up. United Airlines is up. Freeport McMoran, very important. That's copper. So again, if we start seeing copper prices go up, keep an eye on commodities. And you can always go here to commodities, and you can see copper up 1.34%. So keep an eye on Freeport McMoran, FCX. FCX may be a play. So we're going to go and chart it together and see what we could do out of it. Kohl's is up 6% on a board shakeup as well. Baidu's down, JD's down, AMD, Facebook. Nasdaq is taking the brunt of the hit on the future side. And we're going to go ahead and take a look at some commodities together and some commodity trades. So let's go ahead and bring up one of the charts here, and then we'll start taking some questions. Let's take a look at FCX, which is Freeport McMoran. Nice breakout here. Let's go ahead and place an alert together at 38.95. If that does break, then we know that copper is moving to the upside. We're going to go ahead and keep an eye on that. So if copper does continue its move up, let me see if I can have the copper futures ticker. I don't trade copper. So let me see if I can find the copper futures, HG. So we're going to go ahead and type in HG / and you can see copper futures with FCX, and you can compare it together right there. So let's go ahead and place an alert on copper futures together. Not like we're going to trade it because they raised the margin anyways, which was the CME group. And 4.17 now on copper. But again, I'm going to keep an eye on it here on copper futures. I'm going to go ahead and delete SPY-G. I don't need that. And I'll go ahead and move it towards closer to the more of the future side instead of the euro dollar and the dollar yen. So again, FCX is something I'll be watching. Let's place an alert together at 38.95. I talked about it last night with our members on our Discord. I went ahead and put a little thing there saying, keep an eye on FCX. Could be a trade there. Take a look at XLE again. Crude oil is up as well. We talked about that this morning. Crude oil is now at 2.21% of the upside, $60 a barrel. Let's put an alert at 46.75. If we do break that, then I'm going to take a look at those 47s, 47.25, 47.5, and move from there. I like XLE here. XLE looks like, again, the reflation trade means that when interest rates go up, commodities will go up, which are denominated in dollars. Again, crude oil, copper, gold, sometimes. Gold, this is kind of in a world of its own, but I think XLE would probably be the best play. FCX today. Those are the two I'm watching for today. So again, XLE, if we do check back out to that breakout level 46.75, I'll play some calls. FCX, the same at 38.95. So that's where we are. I know there's a lot of questions, so let's go ahead and answer them as we go. Good morning, all. Good morning. Good morning, BAS. Bass is calling. Looking at Tesla graph, is there a gap between 706? Let's take a look at Tesla together. Yeah, there's a gap here. I see it here. Again, we gapped this morning down, and you can see 761. So again, we could fill this gap to 780.88. The only issue is that Tesla is extremely expensive on the option side, so I would decide to skip it. I have snapped this week $65 calls. Do you think we get a continuation to 67? Let me go ahead and get to snap here. It's looking very good. Yep, you do definitely have the nice chart breakout level, so 67 should be coming in this week. CCIV has been on the move with Lucid Motors. Let's go ahead and see if we bet that break above the highs of 64.87. Let's put an alert together. If we do break that, then we'll take a look at the volume. Good morning, Carlos. Are you expecting a bounce back today or looking to exit position at the open? I was going to talk about Citi. No, I think that we have CCL open. I think we're going to catch that this morning. And I do expect to bounce back off this support here of 36.62. 38.62, excuse me. So taking a look at Citi here, I think XLF is a better play as well because I have those as well. But again, Citi's looking very solid. Citi's one of the only banks I like. I like Morgan Stanley. I like Goldman Sachs and JPM. JPM and Goldman are top two for me. But again, we should get that break on Citi right above 65.87. I talked about it. When yields are up, guys, you want to play the financials. And again, when yields are going up, oil's going to go up too. So XLE, FCX, and the financials, maybe Citi would be a play today. Still holding XLF calls. Yep, absolutely. On XLF right now, I'm up 13% on them, and I haven't closed yet. Short at 38.60. That's what I want to see. If we break 38.60, then I'll start taking a look at maybe possible getting some puts here and targeting 382.24. That would be 382 on SPY. I tried to short Qs last week, and I got stopped. Like I basically just got out quickly. The problem with these put positions is that they don't last more than 10 minutes, if that. And they always bounce, which is kind of a killer. It's very hard to short this market. BTC, a good time to buy. I buy every week, so it's always a good time to buy. Tesla support level. Let's take a look at it together. Tesla is at right now 754.30 is my support. Palantir calls. I do have an alert on Palantir right at 30.44. That needs to break. Thoughts on FCL, which is fuel cell. Fuel cell needs a little more. There's a gap to fill right at 22.22. Wait for that break. Thoughts on WMT and calls. Let's take a look at WMT. Yeah, you could see nice breakdown here, but again, because they're raising their pay structure for their employees. So again, nice ride down. If we get above around 139.22, then yeah, we could definitely check back to around 141. Let's wait on that. NEO looks like to be at the bottom of his flag pattern hitting the daily 50 EMA. Yeah, again, I right at support here. I would like it if we did break above 55.79 and go from there. How do you place your Fibonacci? You place it on the hourly or the daily. If you're trading, you can do it in the hourly. For investing, I like the daily. Bitcoin just popped to 53.04. It hit 50, which is really strange. It dived really fast. So I may have incorrect pricing because on one screen it says 48,000. Oh, I have 48,000 here on Bitcoin. So we did break below 50. How about that? But then, I don't know, Coinbase is down. It's acting kind of weird. It showed 53 and now it's 48, but I'm going to go by the future side. 48,335. Big drop on Bitcoin. Nice hoop shots, bro. Looked like a pro. Thank you. I'm new to crypto. What's your signal trigger to buy more? Do you buy whatever price? I buy every week, Paul. Take a look at IGTV. I talk about Bitcoin on Instagram. Take a look at IGTV. I talk about it and break it down. Let's see. Thoughts on G.A.R. I believe that's Kroger. Not much going on there. I'd skip that name. Thoughts on SLV. Again, with inflation, sure. Absolutely, SLV will be something, but I need 26.22 to get there. BAC chasing all-time high. I think XLF is the better play than BAC. Break 34.73, then that would be something to look at. Square reports this week. I'd be very careful. I would need a break of 283.19. They were also price upgraded. What are some of the stocks you will be buying long-term investment in the future? I don't know at this very moment. I'd have to take a look. Mara, again, taking a hit. Why? Because crypto is down. So again, if you're the type of person that is invested in crypto or in Riot or Mara, there's one way to play it there. You could buy the dip now if you want. Thoughts on Tilray? Tilray's okay. It's just so volatile that I'd rather be in THCX, which is what I own. Thoughts on FDX? FDX, I'm going to call, but now I have a few weeks expiring. No idea who writes it out. Yeah, you're seeing it's going to probably tap that 200-day moving average. I don't know what call strike you have. Thoughts on UNH? Love UNH long term. I own that stock. I actually bought some, I think last week or a couple weeks ago. We're just retesting support of 321. It's a great stock to own long term. One of my favorites. XPEV, last question. And again, just a straight shot down. Strong support at 39. Very true, right at 39. So if you're interested in buying that stock, that's something to watch out for. And Bitcoin taking a huge hit. I'll go ahead and tweet that right now. All right, guys, we'll leave it there. Make sure to like and subscribe our videos, turn on notifications. I will catch you guys tomorrow's morning note. See you guys later. Cheers, guys.